Hi, uh, this is an example of calculation of internal rate of return. So sometimes banks offer you different themes, different schemes where you are not sure what kind of rate of return you are getting. They tell you a figure, but that may not be true. So this example based on a real case, real life case, we have tried to work out what is called as internal rate of return, or in simple terms it's the effective rate of return that you get out of your investment. So the theme is like this, that you pay a premium of 3 lakhs rupees per annum, 300,000, 3 lakh rupees per annum. You pay it for 6 years, and you will get 74,000 rupees per annum prorated monthly as interest. At the end of 10 years, you will get back your deposit. As you can see here, whatever total money you deposited, which is around 18 lakhs, you will get it back on maturity, and you are going to get all these cash flows in terms of interest from month 1, month 2, month 3, etc. So what we have to do in such a case is, when we have to calculate the internal rate of return, or you can call it effective rate of return, we have to calculate the sum of each cash flow coming from and going to the bank, and mine going to the bank will be minus, coming from the bank will be plus. As you can see, even the last line, we have put 1800,000 as plus. And you just saw that it got populated based on the figures we have given here. We will also parameterize the number of years of policy, but as of now we have fixed it at 10 years based on the current case. So now when we do this calculation, we get a present value which is based on a formula of I think I'll not spend time on explaining the formula. We'll talk about it later. It is cash flow brought to the present value based on a given IRR, which we keep on assuming and recalculating till the time the sum of all cash flows become zero. So that is the way in which IRR is calculated. So let me proceed. In this calculation, you will find that we have provided uh, provided an opportunity for you to see how it is being calculated, how this one is being brought to zero. So it will run little slower. In a real application, the pause can be removed and can run in a fraction of second. So let's start the calculation. So it is trying 8%, 4%, 6%, 7%, 6.5%, and you can see that this figure will become zero finally. When it has found this total to be zero, it will say it has found the IRR. Yeah. So IRR, the effective rate of return, is 6.0103%. This is a very important tool for evaluating different kinds of investments with different kinds of cash flows. I hope you find this useful. I made it again for a friend, but we will try to generalize it as soon as possible. Your initial response will be appreciated. Thank you. Have a good day.